everyone, and welcome back to Mining Network. So I'm joined with Alexander Scanlon here, who is CEO of Barton Gold. So good to see you again.
Thank you very much.
So we're here in Miami for the Mines and Money show. So let's start by getting a nice overview of the company for those less familiar.
Right, so just very high level summary. Barton Gold is essentially pure play gold in pure play South Australia and Australia. So South Australia is a state that holds about 25% of Australia's known gold resources, but represents only about 2.5% of its annual production. And the reason for this is largely because South Australia is very well known as a mining district, but a lot of the development focus and government focus has been on copper and uranium. So when we think about South Australia, people typically think about the Gawler Craton, which actually covers about 50% of the state. The state itself is a giant geological domain. In the central Gawler Craton is where you have sort of the heart of mining there. On the east side of the Stewart Highway, you have BHP's Olympic Dam, and then Oz Minerals have Prominent Hill and Carapatina. And the news recently is obviously BHP is looking to consolidate the east side of the highway and buy Oz Minerals. On the west side of the highway, you have a known geological province called the Central Gawler Gold Province. There's essentially been two different gold rushes during the past 130 years there. Barton Gold has essentially consolidated the significant majority of pretty much all significant historical producing and exploration assets there. So BHP is consolidating the right side of the highway, we're consolidating the left side of the highway. And the objective is to basically consolidate this region, bring in a lot of new exploration technology and accelerate discovery and development. We have about 5,000 square kilometers, which is, a very, very large land package. It covers multiple historical mines and sort of existing brownfield assets. We have about a 1.1 million ounce resource base there. And then quite importantly, we own the only mill in the region as well. So the only gold mill in particular. So it's an area that's sort of essentially a proven district that we just reconsolidated and are reopening.
And could you run us through the current capital structure?
Yeah, look, we have a pretty simple, clean capital structure. So we have about 176 million shares outstanding. Today, that gives us a market cap of anywhere between sort of 35 to 40 million dollars Australian. We have, as of the 31st of December, we had 8.85 million dollars in the bank. So we're kind of in that sort of 25 to 30 million dollar Australian enterprise value. And when we look at sort of the distribution of the shareholding, one thing that we do emphasize, we think is quite important, is our board and management represent 1/3 ownership of the register. So we're very, very strongly aligned with shareholders, and our senior leadership team get paid a significant component of their compensation in sort of long-term lockup and performance-linked equity options. So these are not, these are not freebies. These aren't just sort of serve your time. These are, you must be there for so many years and you must meet and exceed these very lofty hurdles. So it's really performance, long-term focus-driven strategy wrapped around a team that has a very great amount of experience discovering, developing, financing, and operating assets.
So you've had a lot of news recently, especially in the drilling domain. So talk me through the drill program, what's been going on there and how much you've kind of been drilling.
Yeah, so since we listed the company in the end of June 2021, before we IPO'd the company, we actually grew our existing resources by about 70%. So our sort of cornerstone long-term asset is the Tunkillia project. We bought that as a 558,000 ounce resource. We did some work. We grew it about 70% to 965,000 ounces, where it currently sits. And this is essentially sort of the template for a large-scale, bulk, efficient, open-pit operation. And we kind of look to, for example, Capricorn Metals, their Karlawinda project. We kind of not so jokingly refer to them as like our development heroes. Like we are following their just systematic, progressive model there. So we grew it, then we IPO'd it, and we spent the past sort of 18 months just really kind of showing the market our proof of concept. At Tarcoola, we've identified a whole series of structures which can create repeats of the high-grade pit we have there. At Tunkillia, we've demonstrated that where we have that sort of 965,000 ounce resource, essentially the gold endowment that is there is much, much more broadly distributed than has previously been recognized. So we found 3 new gold zones within a few kilometers there. But we think that the actual core deposit itself has significant extension potential. And the reason is that about 95% of the drilling that informs that deposit was done between the beginning of 1996 and 2008, and mostly between 96 and 2005. And during that time, the US dollar gold price was below $500 per ounce. So in a modern setting, in a modern market setting, that's a very artificially restricted search domain because you can only drill so deep when gold is only so valuable. So after finding these new gold zones, we actually started a really large program in September. In September, I think on the 5th of September, we announced a new gold zone called Area 51, which it's not meant to be any cute name. It's literally quite literally the 51st hole that sort of discovered that mineralization there. But that is interesting because it actually sits 5 kilometers away from the high grade center of our 223 deposit, and it looks the most like that high grade center. You know, the sort of one of the confirmation holes we had there was 17 meters at 3.2 grams per ton. And then immediately below that, I think another 40 or 45 meters around 0.9 gram per ton. So something like 65 meters of mineralization at 1.7 gram per ton, which is very ideal bulk open pit mineralization with a high grade cap. So that got us very excited. We launched what was then a 9,000 meter RC drilling program. We liked what we were seeing. We extended it to a 12,000 meter program. And then we started doing more and more work around Area 51, as well as sort of depth extensions at the main deposit, and decided to add another 2,000 meters of diamond drilling as well. So we have now just wrapped this up, about 14,000 meters of drilling. And sort of the exciting part is that the first drilling we did testing the depth extensions of that main 965,000 ounce deposit really validated our theory. You know, we have the October 2020 mineral resource model, which is based on a block model for mineralization. And then under JORC code, what we refer to as a reasonable prospects for eventual economic extraction open pit. So you have to model the mineralization inside of a reasonably prospective economic pit. We've basically confirmed extensions of the mineralization that's modeled in that block model to depth. But more importantly, we had a suspicion that that sort of restricted search domain was just stopping at the footwall. There's a mafic dike that sort of sits at the footwall. We drilled through that, and on the other side of the dike, there's another mineral sort of shadow, and then you keep going, and there's a second dike with a whole new set of gold zones there. Again, 10, 20, 30 meter thick stuff. So really ideal for bulk open pit, highly efficient operations. Again, you know, we look to our heroes, Carl Lewenda, saying, look, that's exactly what you want to be mining in that contextual setting. So it's very exciting. We still have about 4,000 meters of assays left to receive, but we are now advancing that particular deposit towards a resource update. We're anticipating for April of this year. And subject to the results we get back from Area 51, we're going to see if we can actually turn that into entirely new resource footprints as well. So I think there's sort of, we're pretty excited because this is really where the rubber hits the road after so many years of work. So we hope we'll have 1, maybe 2 updates by June of this year. And then we're going to be right back out there growing it again. So the objective is to get to the end of the year with another significant update and just really show people, look, we bought it, we grew it, we IPO'd it, we grew it, we grew it, we grew it. It's going to keep growing. So now we're going to think about how we're going to develop it, and we'll keep growing it in parallel.
So alongside with that very extensive drill program and very exciting news, you've got this mill, and recently in early December you did a mill clean out. Could you talk me through the thinking behind that? Are you going to be recommissioning it soon?
Yeah, so the mill clean out was sort of a multi-purpose activity. So one thing we did last year, so early 2022, was we actually went and cleaned out some of the circuit in the mill, and we sold about $1 million worth of gold just doing a sort of a basic kind of clean out and preservation on part of the high value component of the mill there. Fast forward, we had been sort of going through the mill and auditing what we thought was in there, and we kind of, there's sort of multiple purposes here. The mill itself is a nice and simple mill, so it's something that's very flexible to the type of feed you put through it. But we think we see opportunity to actually optimize the gravity circuit. So this is a standard gravity circuit where crushed and ground material gets sent up to cyclones, goes down to a Nelson concentrator, and then splits down through the plant on the gravity side. and the leaching side, we think there's potential to optimize the gravity circuit and potentially increase the value of concentrate, essentially, that you're creating that goes into essentially direct electrowinning and pouring of gold. So we wanted to basically deconstruct it, take the equipment off, to demount all the equipment that's there. It's very valuable stuff. Demount it and put it in storage. But as we started taking it down, we realized there was quite a bit of material actually trapped in circuit. So we deconstructed the gravity circuit, took the superstructure down, and we also deconstructed the gold room. And we pulled about 10 tons of material out of the circuit. So, we don't know exactly what's in that. And, we're currently preparing that to go off to be processed. But it will probably be some type of repeat of a bit of a windfall gain for us doing something that we would otherwise do as a first step to kind of looking at a future recommissioning of the plant.
And so obviously there's value in those 10 tons. How would you allocate those funds? Would it be with the updated mineral resource estimate, or would you put it straight into the drilling? Where would you put those funds?
Everything that all the value we generate from income, and we sort of have multiple different sort of projects or special project work streams that we're always pursuing. We're essentially replacing our treasury, restocking treasury internally, while we're then carefully but aggressively spending it on resource growth. So we're essentially creating more exploration capital. When we look at how we do our budgeting, we sort of think forward 12 and 24 months at a time. So when we have budgeted drilling meters, we have already budgeted the mineral resource estimation work. We budgeted the site and field logistics and all of this stuff. So it really is just extra capital that goes right on top. And, as a rough estimate, for every sort of $1 million of income that we have, we can very comfortable say that's another 5,000 meters of drilling that we can do. And that's drilling, assaying, multi-element, all of our, regional structural analysis and modeling. And for us, every 5,000 meters that we have drilled, we have found a new gold zone. So it's it's marginally very high value for us. And that's one thing that really drives our sort of very intense focus on monetize our very substantial existing asset platform while making the resource side even bigger, so the whole thing can restart with a much larger long-term development target.
So you have the only mill in the region. Talk me through the capacity of this mill again and how the infrastructure around benefits you, and also about your neighbours. How would you be feeding this mill?
Yeah, so the mill itself is a 650,000 ton per annum plant. So it's a relatively small mill. If we think it's not, it's not a giant bulk mill that you find sort of sitting in a huge mining hub in WA. It was designed to be processing medium to high grade ore. And it works very efficiently. So the operating efficiency or the processing efficiency was about 94.5% recoveries before the mill was put on care and maintenance. So we keep the mill on care and maintenance. As we've discussed, we've started looking at potential optimization of the mill well in advance of saying, okay, how do we want to turn it back on? In terms of the option to reanimate that mill, it actually, for us, is sort of the step into our long-term project, right? So what we are doing is building a platform that allows us to be comfortable sort of underwriting 150,000 ounces per annum of production within 5 years. But as we shape that up, and that's why we're sort of building the resource base now, as we shape up that development plan, we can then bring forward stage one of operations, utilize the existing mill, start producing, obviously change ourselves from being a asset manager developer to an operator, both in the equity sense and the credit sense. Our credit profile changes dramatically if we already have an operating gold pouring cash flowing mill. So we can start that operation, we can get cash flow going. That cash flow essentially covers our equity costs of our expansion in stage two. So it's very, very useful. When we think about what's happening around us, we worked very hard for a period of 2 or 3 years to sort of keep very quiet what we were doing in the region. We didn't want people to know that we were sort of going and consolidating things, that we've acquired exclusive rights to certain technologies over the region that are sort of meant to be target predictive for both gold and copper. And now we're sort of building and trialing that technology. But since we sort of broke cover, if you will, around the middle of 2020, a number of people have sort of more excitedly come into the region. Obviously, if you know someone's there actively advancing processing infrastructure, it's more attractive to be a regional explorer because there's actually a pathway for that mineralization. There are about 320,000 ounces of JORC resources within 40 kilometers of the mill. That's actually part of a joint venture that we have a minority position in. And the counterparty to that joint venture, they also have a lot of ground in the region, and they have a few other projects that probably are a couple 100,000 ounces of gold in sort of near surface open pitable mineralization. So in a very sort of immediate sense or sort of medium term sense, there's probably about 500,000 ounces of gold within 50 kilometers of the mill. And so that does present some very interesting opportunities for us to look at saying, well, whether we start a stage one processing our material or we start stage one essentially providing toll milling services, these are both viable pathways for us to open up the region and generate a lot of income. Equally, if those surrounding projects haven't yet advanced far enough by the time that we want to start a stage one operation, which is considerably sooner than 5 years, we can begin operations using our existing fully permitted mining leases, our open pit at Tarcoola, which has processed 3, 4, 5 gram per ton ore through our mill previously. And then when we have our second mill operating in the future, that just frees up that plant to then provide toll milling service to the region. So it's really a question of when rather than if.
So you've got a really great team behind you and yourself. So what gives you guys the expertise to really make this happen?
Yeah, look, I think we have a pretty unique proposition in terms of being a so-called developer or explorer. Like we really are much more of an advanced asset manager. So we have a huge amount of installed capital value, and we're essentially just rebuilding a much larger plan around that and then executing. And our team is made up of, both on the board and sort of senior leadership, a very wide range of sort of sector expertise, subject matter expertise. We have very strong South Australian pedigree. We have very strong gold pedigree. But just in the senior levels of the company, we've got about 200 years of experience exploring for, discovering, defining, permitting, financing, developing, operating resource assets. So I am not a technical person myself, right? I'm a financier and an economist. My job is to look at, strategy, financing, looking at ways we can monetize these assets that might not, you might not see other exploration companies earning income like we do, but then we have very, very strong exploration experts who are not only expert in South Australia, but expert in gold. Our chairman, who's joined us in the middle of last year, was the former CFO of Normandy Mining, which is a name that's probably lesser known outside of Australia. But inside of Australia, they were the largest gold producer for much of the sort of the end of the 20th century. And Normandy was the company that Newmont Mining, which is a name that kind of everybody knows, Newmont acquired Normandy to make their entry into Australia. So that's really the pedigree that we have around not only sort of asset development, but even treasury management, right? So we're pretty kind of unique in that respect. And I think, when I was sort of running an investment team prior to stepping into this investment, which came out of that investment team, we were always sort of very careful to say, like, our first, second, third, and fourth criteria are people, and then it's assets, and then it's people, right? So good teams deliver results, even in bad markets, even in bad times. You keep moving ahead, and that's how you get to really good outcomes. And we've built a team that engenders that thinking. Everyone is now based in South Australia at the assets. This actually saves us money as well. So we're very, very focused, and I think the leadership that we have is really dedicated to delivering an operational outcome, which is I think something that we hang our hat on.
Yeah, definitely. So talk me through the next 12 to 24 months for investors. What are the key kind of milestones we should be looking out for?
Well, I think 2023 is really focused on, it's sort of the rubber hits the road moment, right? It's sort of everything that we've been slowly building towards for quite literally the last 5 years. So, we did a lot of work pre-IPO to make sure that we would have a really clear premise and we'd be able to perform well post-IPO. And so the last 18 months, in the period between, say IPO and 1st of January 2023, has really been about just demonstrating that sort of proof of geological concept, some discovery, some growth of the footprint, 2023 is really about now converting that into just simple raw growth. So taking our 1.1 million ounce resource base and putting some real gains on that in terms of growth. And we want to grow it 2, maybe 3 times during the year. And the idea is therefore to come to the end of 2023 and say, look, we bought it, we grew it, we grew it, we grew it, we grew it. It's going to keep growing. So we're going to build, right? And that's sort of that really important message, because then people can really be looking forward with confidence that the foundation is still getting stronger. So what that means for us is, I think, as we mentioned, we're targeting a resource update for April. If Area 51 is as interesting in the assays as we hope it is, that may become its own new resource base. So that could be a second resource update for the Tonkilia project. We are also looking at a number of very interesting sort of near open pit discovery targets near that high grade pit we have at Tarcoola. And so we'll be right back out in field again, drilling for further updates at the end of the year. For all intents and purposes, we want to essentially be announcing or starting on the 1st of January 2024 feasibility studies for development. And then, sprinkled in between all of this, we have, as we always do, half a dozen or more geophysical programs, other special projects that we'll be doing. We will be processing that material that we pulled out of the mill just before Christmas. So we might have, 1 or 2 gold sales along the way too, just for a bit of fun. But it will be a very, very busy 12 months ahead. And then really what we find ourselves is sort of in a position of constantly accelerating. It's not sort of work and rest and work and rest. We're constantly growing the team, constantly expanding the scope of our works, and constantly delivering more and more in terms of building these foundations for a major gold producer.
Well, it's really exciting stuff, and I always look forward to kind of hearing the updates and seeing where everything's going. So thank you so much for your time today, Alex.
Thank you for having us.